Hey everyone, welcome back to Corporate Decoder, the place where we decode the money-making secrets of the corporate world. Oh, it looks like we have a very interesting report from Citius Oncology Incorporated today. And let me tell you, things are getting spicy with their latest filing. This is not just another financial report, it is a story of a company trying to navigate the tricky waters of drug commerce. Socialization amidst significant financial hurdles and some really interesting stock movements before we dive deep into the numbers. Remember, if you enjoy these kinds of unfiltered financial breakdowns, make sure to hit that subscribe button and ring the bell so you never miss an update. We've also got a growing community over on our Discord server linked in the description below. Come join the conversation and let's decode these corporate filings together. Now let's get right into it. Citius Oncology Incorporated has just filed its post. Effective amendment to its registration statement, a mouthful. I know, but what it really means is they are updating information about selling their stock and giving us a look under the hood at where they are. And where they're trying to go, the core of it is about shares tied to warrants. These are like tickets that let people buy company stock at a set price, and Citius is telling us about how many shares are available and what happens when these tickets are used. This is a big headline right out of the gate. Citius Oncology is signaling upfront that they have been losing money and they expect to keep losing money for a while. This isn't uncommon for drug development companies since bringing a new medicine to market is incredibly expensive and takes a very long time, but it's crucial to understand that they are still in the early stages of building their business and profitability is not here yet, it is a future goal. This is their primary product, Lympha, a drug for a specific type of cancer called cutaneous T-cell lymphoma, or CTCL. The fact that it launched in December 2025 means they are just starting to generate revenue from it, which is a huge milestone, but also a massive financial undertaking. Okay, this is perhaps the most serious flag in the entire report when the auditors say there is substantial doubt about a company's ability to continue as a going concern. It means they are not entirely sure the company will be around to pay its bills in the near future. This is usually tied to the company's cash situation and its ability to fund its operations. This is a critical point to watch. This tells us where their cash runway stands. They believe that with the money they recently raised, they can keep the lights on until May 2026. But the key phrase here is they will need to raise additional capital in the future to keep operating beyond that. So the May 2026 prediction is a marker, not a guarantee of long-term survival without more funding. Here we see the reality of their financial position, a little over $7 million in cash at the end of 2025, contrasted with a massive accumulated deficit of nearly $70 million. This deficit shows the total net losses the company has incurred. Since its beginning, it underscores the going concern doubt and highlights the need for significant future investment. This is where the money from selling shares directly goes. They plan to pour it into launching Lympha, paying ongoing fees for licenses, and just general company costs. This shows their strategy is centered on getting Lympha to market, and that requires cash for all the licensing and royalty payments, which are a significant part of their financial obligations. This figure is negative, which means their liabilities are greater than their tangible assets. It is another way of saying the company in its current state has negative book value. This is a stark indicator of their financial health at that point in time. Let's look at how the company is performing on a year-over-year basis. In 2025, total revenues were zero, and in 2024, they were also zero. This means that before December 2025, they were not generating any income from sales, which is expected since Lympha was just starting its commercial journey. Their research and development costs went up from about $4.9 million in 2024 to over $6.4 million in 2025. This increase was mainly due to costs for a drug substance batch needed for a pre-license inspection of their manufacturer. This shows ongoing investment in getting their product ready for wider use. General and administrative expenses also saw an increase from about $8.1 million in 2024 to nearly $8.8 million in 2025. The company attributes this to pre-commercial and commercial launch activities like market research, marketing, and getting drug reimbursement from health plans. This is a necessary spend for bringing a product to market, but it adds to the overall expenses. The net loss for the year ended the 30th of September 2025 was close to $24.8 million compared to a net loss of about $21.1 million. In 2024, the overall loss widened by about $3.6 million. This increase in loss is primarily driven by the higher research and development and general administrative costs. As we just discussed, the picture is clear they are investing heavily in growth, but it is all coming at the cost of increasing losses. Now let's quickly glance at the 3-month period ending the 31st of December 2025. This is where it gets interesting finally. In the last 3 months of 2025, they reported revenue of nearly $4 million. This is from the commercial launch of Lympha, which started in December 2025. It is a small number in the grand scheme, but it is their first real revenue and a massive step forward. Even with this new revenue, the company still reported a net loss of about $5.5 million for the quarter. This is an improvement though from the $6.6 million loss they had in the same period the previous year. The loss reduction comes from the new revenue, but it is still a substantial loss and highlights that the company is not yet profitable. This statement from the company really drives home the point that their entire future hinges on Lympha's success. They are not a diversified company with multiple revenue streams at this stage. So if Lympha does not gain market acceptance, or if they face unexpected challenges, it could be very detrimental. This is a standard but important risk factor declaration. They acknowledge the stiff competition in the pharmaceutical space and admit they might not be able to keep up with bigger players who have more resources and experience. This is a key challenge they need to overcome. This is a direct warning to potential investors. Citius Oncology is saying their stock price can swing wildly, and investing in it is very risky. You could lose your entire investment. This kind of volatility is typical for early-stage biopharma companies that are subject to trial results, regulatory approvals, and funding news. This is a crucial disclosure about governance. Citius Pharma holds a majority of the voting power, meaning they essentially control the company. This creates a potential conflict of interest because Citius Pharma might make decisions that benefit themselves over the other shareholders. This is something minority investors must be very aware of. This is just a formality regarding who audited their books, but the next sentence is the important part. This is the same point as before, reinforcing the auditor's serious concerns about the company's ability to stay in business without further financial support. It is important to repeat this because it is the biggest red flag in the filing. Now let's talk about the financial tables themselves, because that is where the real meat is. Looking at their consolidated balance sheet on the 30th of September 2025, their total current assets were about $27.5 million, but a huge chunk of that was inventory, which was over $22 million, their actual readily available cash, and cash equivalents was only about $3.9 million. This signifies that most of their assets are tied up in goods that haven't been sold yet. On the liability side, accounts payable was over $13 million, and more concerning, their license payable was a massive $22.6 million. These are significant obligations, especially when you look at their cash position. It appears they have a lot of money owed to suppliers and licenses, which adds to the pressure. Moving to the statements of operations for the year ended the 30th of September 2025, their net loss was nearly $24.8 million spread across over 73 million weighted average shares outstanding. This means for every share of common stock they effectively lost about 34 cents. This directly relates back to the earlier mentioned accumulated deficit and the going concern warning. So what is my take on Citius Oncology Incorporated based on this filing? The company is in a high-risk, high-reward situation. They have a product, Lympha, that is finally launched, which is a critical step, but they are still burning through cash at an alarming rate. The auditor's concerns about their ability to continue as a going concern are a major red flag. The fact that they project only enough funds until May 2026 without additional capital means they are heavily reliant on future financing, which is not guaranteed. The negative net tangible book value further emphasizes their fragile financial state. The reliance on Citius Pharmaceuticals Incorporated as a controlling entity also presents potential conflicts of interest that could impact decisions benefiting public stockholders. The company's strategy is heavily focused on Lympha's commercial success. Any setback in its market acceptance or regulatory compliance could have severe consequences. In conclusion, Citius Oncology is a company at a very early and critical stage of its life cycle. While the launch of Lympha is a positive development, the financial realities, including significant losses and auditor concerns about their ability to keep operating, are hard to ignore. Investors looking at this company must be prepared for extreme volatility and the possibility that their investment could be wiped out without significant further investment and successful execution of their commercial strategy. Alright, that is our deep dive into Citius Oncology Incorporated's latest filing. What do you think about their prospects? Are they on the verge of a breakthrough or a breakdown? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more unfiltered corporate financial analysis. And don't forget to join our Discord community linked in the description for even more insights and great discuss. Yayans, thanks for watching, and until next time, keep decoding the markets.